Welcome back, everyone, to the second episode of Dollars and Cents, Sabre High School FBLA's very own financial literacy podcast. So I'm glad to see that some of you decided to stick with me and are actually interested in becoming financially literate. And if you somehow miraculously got here by accident, then hello, allow me to introduce myself. My name is Kamil Snow, and I'm the host of this podcast. So for today's episode, we will be taking a deep dive into taxes. Yes, that thing that everyone tells you to wince about when hearing the word. The thing that everyone argues about during those political discussions when everyone gets together. Uncle Bob swears that paying taxes is very un-American, while Aunt Sally swears that taxes are the best thing that ever existed. I'm not here to pick a side in your political debates, but instead shed some light on this little divisive thing that all members of society actually have to do. But before we can do so, I find it very important for me to define what a tax actually is. I promise, the concept is actually very easy to understand. A tax is a mandatory contribution, usually in the form of money, to a government. Essentially, taxes are really important since they offer the government funds. This applies to the local, state, and federal government. Now, the government raises those funds through various methods. It varies, right? From income to sales and all those different kinds of taxes. Now, don't worry, we will go more into those later. For now, let us explore how taxes actually came to be. Well, at least in America. I think going into all of taxes would take a little long. I think they started in ancient Egypt in some BC times. Anyways. So, as you know from your U.S. history classes, we never really liked taxes as Americans. All the way back in colonial times, the U.S. colonies were forced to pay a variety of taxes. But the ones that really got to us was part of the Stamp Act. So in the Stamp Act, we had to pay all types of taxes on papers, stamps, deeds on houses, all these different things. And let me tell you, we were not happy campers. We began to scream, taxation without representation. And eventually, we sorta yeeted away from the British and started our own country. So in the beginning, we wanted to be really American and not raise taxes, and only put some on things like whiskey, which we call an excise tax. Now, some drunken farmers got really mad at this and started the Whiskey Rebellion. They thought, okay, maybe this is a really bad idea. Let's not stop in the way of drunk farmers and their whiskey. So, they alternated between imposing taxes and not imposing taxes until the Civil War. They realized that the war was sorta really expensive, so they developed the country's first income tax. Now, an income tax, it's quite simply a tax on the amount of money you make. Now, it was dissolved 10 years later. So they went back and forth again, and eventually they saw it to be unconstitutional. Then in 1916, with the Revenue Act, they made it more inclusive because, surprise, surprise, war was expensive. So it went up to 70% of the income that was possibly able to be taxed. And again, with the Great Depression, they lowered it because people were sorta really poor and struggling to get food on the table. Now, in the 50s, the big boys of taxes, the Internal Revenue Service, or the IRS, came into play. The IRS is basically in charge of tax enforcement, overseeing that everyone is basically paying their taxes in a fine and sound way. They do so by performing audits, which are essentially investigations into someone's finances and to see if anything is a little bit fishy. Anyways, moving on. Ronald Reagan came into office and he dramatically dropped the max income tax to about 28% in 1988 because he believed in low taxes in general. And honestly, if you got one thing out of this ramble that I've been going on, is that this is kind of a yo-yo effect that we kind of go up and down and up and down and up and down. And some people say, oh my God, taxes are so great. The taxes should be so high. We're going to have so much money. And then the other one's like, this is un-American. We cannot have so many taxes in this country. So, yeah, it's for you to decide which one you actually think is true. All right. Now, I think it would be a really good idea to go more into what the different types of taxes are and how they interact on a state and local level. Hello, welcome back. So we've got the basic rundown when it comes to the history of taxes. So let's now further explore the different ways that the government raises money through the taxes. You may have gotten a sneak peek for some of them. And I'll also save you some of the less common ones and stick to the ones that you'll be dealing with frequently. So the first one, which we actually discussed in the history portion, is called an income tax. Basically, if you get paid through a paycheck, a portion of your salary you earn goes to the government in the form of an income tax. As you've learned below, the rate can vary a lot state by state and also by income. Some states have a flat rate, but most have something called a tax bracket. Essentially, the richer you are, the more percent of your income you have to pay to the government. All right, now I think I have to quickly move on from the income taxes on the rare occurrence that someone's actually listening that's, an adult and their blood is already starting to boil. So, the next type of tax that is very common is called the sales tax. This is essentially a state-based tax, and it varies a lot by state, and even in the community. Essentially, whenever you buy something off of Amazon and scoff at the extra couple dollars you have to pay and swear you got ripped off and that everything is fake, yeah, that's the sales tax. Similar to the sales tax is something that we actually talked about before, the excise tax. It's almost exactly the same thing, except the only difference is that it's taxed on specific goods like alcohol and cigarettes. Moving right on, we have payroll taxes. Similar to the income tax, it takes out a percentage of your income, but instead goes to two specific programs, Medicare and Medicaid. Established by Lyndon B. Johnson in the 1960s, they attempt to help low-income and elderly people receive medical care. I'd say the final common tax type that exists is the U.S. property tax. In this type of tax, you essentially have to pay money for owning some kind of real estate. This is mostly a local tax and highly varies from community to community. And if you're listening in New Jersey, this state is kind of known for astronomical property taxes. Hopefully, now if you hear your parents bickering in the background about this, you'll actually know what they're talking about. So now that we have a basic overview of the different types of taxes, let me say a date to slightly frighten the adult listeners of this podcast. April 15th. All right, my ghost voice sucks, but anyways, don't know what I'm referring to? Keep listening. I'm sure a lot of you teenage listeners are sitting in your naive bliss, thinking back to April 15th as a great day where you got your 100 on your Spanish quiz or went to the movies with your friends. But I assure you, for grown-ups, it's kind of a sucky and scary day. It's called Tax Day. Essentially, it is the day where you have to file your income tax returns. Well, what is a tax return? Essentially, it's paperwork that tells the government how much money you earn this year to see how much taxes you need to contribute. And yes, it is overseen by the big boys, the IRS, which ensure that everyone is contributing their fair share. First, let us do a quick overview of how the process works. When you join a new job, they will ask you to fill out a special form called the W-4. It tells you how much your employer should withhold from your paycheck. Yeah, so essentially, if you're told that you'll be making a certain amount, really, you'll be making less, since your employer will take money straight out of your paycheck. This is only a precursor, though. In reality, this number can be a little off, too high or too low. To be certain of your financial situation, you will have to file out a formal tax return. In this process, you will have to fill out a form called the 1040, which is a giant piece of paperwork that the government uses as your tax returns. You have a couple options actually to fill these out. The first option is to fill out the form 1040 by yourself. I don't know if I'd advise this option, however, especially if you do not have an advanced knowledge of finances and taxes. The next option is using a tax software program like TurboTax and H&R Block. This system is very user-friendly and can help the process become easier. It can even find ways to save you money in the process, but since it's a computer program, it will be automated. It can't find any out-of-the-box thinking, any of the out-of-the-box ways to save you money. And note that it can cost you some money, but there are some free options that exist. Your third, and really your most expensive option usually, is asking an accountant or tax professional to help you save the most money when filing your taxes. So the pro with this method is that can really help maximize your tax refunds. The con, as I stated before, is that it is your most expensive option. I would try and look for an affordable option and do some research if the amount you will save from filing the taxes through a professional outweighs the cost of the professional itself. Oh, and how do I know how much I owe? Basically, at the end of the tax year, your employee will give you a W-2 form to fill out. The information will be put on your tax return, and it will show you how much you owe to the government and how much you are owed back in taxes. So number one, yes, I know there are way too many form names, and why is there a W-2 and a W-4? They sound exactly the same. I don't know, take some notes or something. And two, wait, did you just say how much I'm owed back? Yes, how much you're owed back. This is where taxes actually get really complicated. There are ways to reduce the amount of money you have to pay to the government, but a quick warning. The intricate details here would be very confusing, and I'd have to use a lot of financial terms that require further research. Not to mention, I can't really tell you specifically how you can save money, since that varies really for everyone's financial situation. Instead, I can simply arm you with some weapons for your money-saving arsenal. The first thing I can tell you about are tax brackets, which I actually mentioned before. Remember how I said that income taxes are usually more expensive the richer you get? Yeah, so make sure you do some research and file for the correct tax bracket. Again, let me say it again. Research. They change like every single year, so make sure that you are paying the amount you should be paying. With that out of the way, the major way to save money is through something called a deduction. Just like the word suggests, it is the way that money that you have to pay for taxes can be reduced. Now, I'm just going to warn you guys. This topic could probably take like 5 podcasts to actually go over fully. But for our case, let us start with the basics. There are 2 types of deductions: itemized deductions and standard deductions. Starting with standard deductions, they're the easy one that most people go for. They change year by year, but let me read you the ones for the 2021 cycle. They include $25,100 for those who are married and file joint returns, $12,550 for single taxpayers who are married but file separate returns, and $18,800 for taxpayers who qualify as heads of household. Okay, wait. After I just read that, I realized I did not tell you about something very important. I know marriage seems so far away for a lot of you younger viewers, but when you get married, you have two main options: file jointly or together, or file separately, which means you're going solo, pal. So with that out of the way, you may be asking, what about the other type of deduction? Well, itemized deductions are the more complex form of deductions that span along a wide range of types. The difference between this type of deduction and a standard type of deduction is really how you count it. While the first one is kind of a lump total of one big deduction, the other one is where you add up each of your individual deductions that you can receive from your expenses. Some examples of things that you can itemize deductions for are medical and dental expenses, state and local income taxes, real estate taxes, mortgage insurance premiums, gifts to charity, and casualty or theft losses. I would do more research into these different types of things if this seems like your kind of thing, but usually for most people, the standard deduction will save you more money than itemizing all of them. Honestly, unless if you're like a billionaire or have crazy medical expenses, I would usually go with the standard deduction. But just like everything else I say, I urge you to do your own research in this topic. Besides deductions, there are also credits. Now, I did not explicitly say this, but a deduction is just a way to reduce your taxable income, so it's indirectly lowering the amount of money you have to pay. On the other hand, the tax credit lowers the amount you have to pay directly. Each of these credits has its own complex rules of how to qualify, so for the sake of time, I'll just say again, I urge you to do some more research into tax credits when the time comes. Now, I apologize that you have to do all this external research, but I promise you it's really important. Finally, let's move on to tax refunds. Basically, this is the amount that the IRS will give you back after you tell them, hey, I have XYZ that should be saving me money, and I want my money back. So when you finally either mail or electronically send your money to the IRS or State Department of Revenue that you're in, they will ask you how you want to get your money back. You can either get a check or deposit it into a bank account. Or usually, you can even divide the amount of money that you want to get back into savings bonds, which are essentially little IOUs for the government, that you agree to help the government pay for its debt, where you will get your money back with interest. It's almost like a little stock in the US government. Anyways, I think I've overloaded you with information for the day. If anything seems overwhelming or confusing, good. That's how it was kind of designed to be. I tried my hardest to make it the shortest possible episode without sacrificing quality and comprehensiveness. I highly encourage all of you to rewatch whatever part you found confusing. And with that, I want to offer my final thanks to Stephanie Fernandez and Iman Shahid for helping me produce the show, and teachers Mr. Howard and Mrs. Rehane for offering their guidance for every step of the way. Join us next week for our discussion on student debt. Yes, that wonderful thing that barely any college student can escape. We'll break down the important steps of the process and ultimately how to minimize the amount you have to pay. In any case, this has been Dollars and Cents with your host, Camille Chau. Thank you, and goodbye.